I think that means we are official. We're live. We're on the air. Mr. Garth Graham and Sue Woodard here doing another
How are
issue
you?
of Advisory Angle with the Stratmor Group,
Yep,
powered by the
yep,
Chrisman commentary. But
yep.
you're out and about. Garth Graham is on the loose today. Where are you today, Garth?
I'm at the NBA Chairman's Conference in Sea Island, Georgia, which is just a miserable place to be. I don't know if you've ever been here, but this whole five-star resort thing, it's just, sometimes it just gets tiring. Like,
Somebody's got to do
yeah,
it. You know what?
exactly. Someone's going to do it. So,
I mean,
yes. So I was at the NBA Chairman's. This is an absolutely, they called the Cloisters, beautiful place. But
yeah.
I'd much rather be in a virtual session and talking about the consumer direct market because that's my passion.
Well, as fate would have it, it's exactly what we're doing right now.
Oh, well,
And
there you go.
I know, isn't it amazing? So
Yeah.
we did actually have last time I saw you, it was in Heartland in Chicago, and we were actually running this consumer direct workshop.
Yep.
And that's what we're going to be digging into today. And you made a really interesting observation right out of the gates, is you said many of the other workshops that we do at Stratmore, the group is totally good doing it virtually, but oddly enough, the consumer direct folks, which are by and large doing their jobs very virtually,
Hmm.
they're the ones that want to get together.
Yep.
Yeah,
Well, and
that
we
was pretty
and
interesting.
I had four different people this week just actually who weren't able to make it and who said, but I'm coming to the next one. I heard
Yeah,
good things or whatever it might be. By the way, I think what that is really is, and there's an irony to the fact that the people for consumer direct that are mostly running call centers like to be face to face.
yeah,
And sometimes with retail people, they like to do webinars. And I think what it is there's not really, other than our workshop around consumer direct, there's not a lot of natural forums where CD leaders can exchange information and ideas. And there's
that's
certainly,
right.
I mean, there's the lead con or the lending tree conference or things like that, where that's really about the lead business. But part of CD, and I'll share some statistics in a second, a big part of CD is the recapture and the banks who do cross sell through centralized units. So, the lead, they're not going to lead related conferences, they're going to, loan recapture related
That's right.
conversation. And, that's the forum that we like to do.
Yep. Yep. And it was, I mean, it was a great session. People were really engaged and we had unbelievable brands there. I think it was a total of maybe 50 or 60 people.
Yeah.
And we had brands from, Figure to SoFi to Movement to Fairway to Navy Federal to USAA to Mutual of Omaha, Harvest,
New
City.
Marahome, New Res,
Yes.
servicers like that. Yeah, it was a great group.
Amazing, amazing brand. So we want to talk
Yeah.
a little bit, Garth. I think we want to start with maybe getting into some of the trends that you're seeing,
Yeah.
some of the data. I definitely have the slides. If we want to show the screen, we can probably do that. And then talk a little bit about some of what came up during the sessions because there's some really pretty amazing takeaways there.
Yeah, sure. So I think let's just sort of rattle through the data real quick, and anybody can put in chat or send us an email, find us on LinkedIn, et cetera. And if there's any one particular, I want to show my boss that, we could send you a slide or two. So here's the big trend, and there's a few of them. If last year, 65 or in the last year, 65% of all refinanced units were done through Consumer Direct. That is a big number. 65%. Do you notice I said units? I did not say dollars. And the reason is
Right.
because the call center tends to take lower loan amounts, partially because it's a lot of servicing runoff, so lower balances, and partially because retail people tend to chase bigger loans. So now I'll get into the purchase. It's about 20% of purchase loans are done through CD. So if you ask how's this consumer direct market doing, my answer is kind of it depends on how much refi they're able to do because they tend to feast on the refis, 2 out of 3 refis versus only 1 out of 5 purchases. What this does mean, though, is that at some level, consumers are showing an adoption or acceptance of doing their refi, which by definition is at least the second loan they've ever done in their lifetime. It might be their 10th loan, but it's not their first time. They certainly are showing acceptance of doing it through digital, online, and call center related activities. By the way, the other stat that is staggering, and this is where having Figure in the room was super,
Mhm.
illuminating, is the in the home equity space, 60% of home equity is done through consumer direct or through some centralized model. That includes Figure and all those lenders Figure works with in a partnership model. That's in that number. That number was 10% 10 years ago. So we've gone from 10% of home equity being done through a centralized unit to 60% in a decade. That is one heck of a change. And by that 60% is exactly like the refi number. It's the same number.
Yeah.
So 2 out of 3 customers, when they are getting cash out of their home or just refinancing their home, will do it through a centralized unit. That is really the trend data that's pretty applicable.
The other thing that I remember Mike Tannenbaum shared about that is that he said that 85% of their home equities went under their fast close model with automated verification and had a 9-day close for a home equity, and very, very easy for the consumer, which, their ratings are pretty good.
Yeah. And of course, somebody immediately had, and by the way, when you come to these workshops, there's always discussions and people start talking to each other. I mean, I throw this stat up and I try to, kind of mix it up and get people talking about it. But the thing that pretty quickly became is one advantage that they have is a different regulatory climate around home equity. So certainly when everybody says that's technically impossible, that can never be done. Well, get away from your LEITP, consumer direct, or CD must be done at 3 days in advance model. They can do it because it's a different regulatory climate. The other, though, to be blunt, they absolutely positively have built an extremely efficient origination platform, and there's some others in the space too around home equity, but they built something that's super efficient for a very specific buy box. And the other item he shared is that a vast majority of their consumers opt in and share the data necessary to automate the income verification. And, they're relying on AVMs instead of full appraisals. So, I mean, it's a very efficient process. It is not necessarily the cheapest home equity loan option in the marketplace. The banks will tend to have lower rates, yet they're stealing market share from banks, and the banks in the room were admitted so. And what do you think about the fact that those consumers are saying, I would like cash, I would like it quick, and I am willing to forego seeking the lowest potential rate in the industry, maybe, for that cash. And that's what they're doing.
There's a question here. We might as well jump into it. Michael's asking, speaking of market share, how much of the business is done by the brokers?
So that's a sort of separate set of questions. So within the broker community, there may be brokers who also acquire leads and thus are doing it kind of in a direct model. They may be self-sourcing, but the overall, broker share number, I didn't look for this purpose, so I could try to dig that up, is roughly 20%.
Yeah, that sounds about right.
Yeah. So it's, you could kind of take these 60, 2/3, 1/3, and the 21 out of 4, and say that's of the 80% that is in the traditional retail model.
So do you want to talk a little bit, speaking of, then we're kind of getting into cost of doing a loan and margins and so forth. You want to, chat a little bit about that? What some of the numbers showed there in terms of
sure.
Yeah.
So here's the other stat. So at STRATMOR, we've been doing benchmarking so long that we can come up with this type of statistic. And this statistic is consumer direct is actually the most profitable channel average over the last 25 years. Not every year, but if I take all the profits for the last 25 years and average it, CD is the highest. Retail's right below it. Then comes wholesale, then comes correspondent. It's that is intuitive to people who are in our industry, but the data proves it out as well. The tricky part is in 2024, it's either borderline or not profitable, primarily because of some of the challenges associated with long nurture purchase leads. And the lead costs are high. The other thing we spent a lot of time talking about, my God, we could do a whole thing just on this, is the cost of credit and verification services when you have a related loan pull through. That, by the way, impacts retail too.
Yes.
So it's still profitable, especially on a gross margin basis. And gross margin being how much do I charge for my loan less my direct expense or my origination expenses. On a
Yep.
gross margin basis, profitable as well. Right now, Consumer Direct has about a $2,400 per loan advantage in cost. So that's almost 75 basis points, 2,400 versus retail.
Yep.
And the reason is we intuitively know they pay substantially lower commission, but they have higher marketing cost. The
Yep.
issue in CD, though, is if your marketing cost gets up over a certain level, depending on your model, you will no longer buy those leads or invest in that marketing channel. So it is a little bit of a controllable expense. And I'm not saying there's not some pain, like, if you crank up a campaign and it ends up the marketing cost is $2,000 alone, and then you're like, oh crap, like, I can't afford those leads. And I'm going to talk
Right.
about that when we talk about Secret Shopper in a minute, what conclusion you should make from that. But
Yep.
at CD, there is a $2,400 advantage in sales and marketing on average over the last 3 years.
Yes, and to your point, I know some numbers we talked about as well, where the retail sales expense is growing every year, approximately $7,000 per loan, where CD, to your point, has maintained the lower one, dropped to about 4,000. So it's in that $2,500 range less per loan. So there was an interesting discussion about, loan officer commissions that ensued, which we may not want to get into on this call, but it was an interesting discussion, just looking at the profitability there.
Yeah. So, and by the way, most CDs are still paying basis points, but not universal the way they are in retail. One of the things that I've said in the past, and by the way, I started in this industry as a loan officer. So before somebody says, you're just some consultant that doesn't understand, I do kind of understand. I was an originator and managed originators, et cetera.
Yep.
But the issue with basis points is that we are indexing to the loan amount, and the loan amount is indexing to the real estate values, which are going up significantly faster than inflation. So we keep paying more and more and more in traditional sales comp every single year. In fact, almost $1,000 to $1,500 of that excess commission is due to that factor. That is a little less so in CD, and it's less so because one, there's more companies that do per unit compensation instead of dollars. Yep. And the second is their average loan amount does not skyrocket as much because, by the way, they only do 1 out of 5 purchases. So
I put an interesting stat, somewhat related, and some data that we heard from Ingenious. Top 10% of loan officers are doing 30% of the dollar volume, 42% of the transactions, top 40% doing 80% of the volume. So it is interesting when you, again, as you start to look at profit margins, what are you paying? How does this work? There's the difference between the retail and the consumer direct, but it's a very interesting dichotomy between overall expenses and how those are being spread out amongst the loan officer force.
Yeah. And by the way, I think that data is the analysis of what we call relevant LOs, meaning relevant. We're defining as they do at least 5 loans in a year, which is,
that's right.
I would say that, boy, that's barely relevant, but at least it's taking out all the people who might have a license but are not particularly active. And that data, so you can choose what to share there, but that's pretty staggering, staggering data.
Two of the juicy topics that we covered that I know we want to go to, if you're not ready to go there yet, you just tell me, but I know secret shopping and AI were very hot topics that we spent some time on.
Yeah. So before I do that, let me just say one other thing.
Yeah.
Everybody, when we talk a high cost per unit, many will instantly go to fulfillment. So it's kind of this remarkable thing of most of the cost is in sales, but let's talk about what we pay underwriters. I at least figure I'd mention fulfillment, defined as processing, underwriting, closing. The cost per unit is almost the same every year between CD and retail. So it's not much different. The productivity numbers are a little bit different because in CD, the pull through is lower. So the way you get to the cost per unit is a little different, but it's very, very similar. Fulfillment's, like $3,000 a loan. It's, next year it'll be $3,100 a loan. The year after that, it might be $3,200 a loan, but it's nowhere near the swings that you see in a delta between those two channels. I will say we did something this year for the first time ever. And the CD people who showed up, we secret shopped every single one of them before they got there. And when we did this, and my colleague Brett led us through this process. We did not share it openly. We didn't, shame anybody. We did, though, share the secret shopping insights with very specific examples anonymized. So we'd block out the logos, block out the names. And there's some remarkable insights. And then I'd like, as soon as we cover this, Sue, then I think the way you asked the question is exactly right. Then let's talk about AI. But the
Yes.
insights were that the people, process, and technology, from a consumer perspective, when we STRATMOR pretend we're consumers and try to get loans from these companies, and these 50 professionals sitting in the room watching and listening to this, when we did this in advance of this, it's very inconsistent. It's in some ways very challenging to connect with the actual loan originator. And what we did with Secret Shoppers, we kept it pretty simple, and we think we kept it pretty real by saying, look, we just want to get an interest rate quote, and we'd like you to send it to us. And what we found was it's hard to get to the right loan officer, sometimes wait on hold. Sometimes they would have chat bots or chat, but they wouldn't necessarily enable us to get off chat. Sometimes they would say things like, we would use a tool, technology they might have implemented, saying, hey, schedule a callback. We schedule a callback and never receive it. Then sometimes we would get emails, and the emails would say, hey, if you need information, just give me a call. And then we would say, okay, or you can call me. I'm available right now. We wouldn't get a call. So
Right.
we're literally, I'm incredulous that we're in a climate where everybody says how hard it is, yet it's not that easy to get someone to get you on the phone, help
Yes.
you, and actually provide the right quote. It's really sort of an indictment of the model. And I will say it is classically people, process, and tech, because some point people aren't being held accountable. Some point the process was not
Right.
really clear, and the handoffs weren't great. And in some cases, the technologies were not integrated. And
Yeah. And there was some of the key things that, that came up. We kind of, said what were the biggest headlines. And interestingly enough, as Garth said, challenging to get connected to a loan officer, which is kind of a shocker. And it was very interesting, by the way, as Garth said, we didn't out anybody, change the colors and everything. But the people in this room were very open and were like, yeah, that was us. That was us. That thing stinks right there, And so it was very, it was a really good discussion. But yes, challenging to get a hold of someone. Very rapid lead reassignment and different phone numbers popping up. Very confusing, very jarring experience to a borrower who in many cases is maybe doing this for their first time, trying to get in there. Very confusing, very off-putting. Getting no response at all. That was probably one of the biggest shockers, was, just getting no response whatsoever. I mean, obviously meaning something is broken somewhere in that journey, somewhere in the technology, something's not popping up to the right place. In some cases, we saw the CRM was not updated to reflect the correct status, which it's a challenge.
By the way, so
yeah,
we rarely saw where it was updated.
Yes.
And I mean, well, let me restate it. Sometimes it was not the right status. So you'd get an automated message that didn't match the fact we just talked 15 minutes ago. That might just be a technical refresh data thing.
Totally.
What I will say, a vast majority of the time, the information that we shared on why we were trying to get a rate quote, and by the way, we were pretending this is a purchase. A vast majority of the time, the information that we as the shopper provided to the human being on the other end of the line or through the web form was not in the CRM. Meaning the person didn't type it, it didn't integrate, or they didn't type it because they really didn't listen. So we're leaving breadcrumbs like, yeah, this is my first time home buyer and I'm trying to move from this area to that. We're trying to give an opportunity for a salesperson to make an empathetic connection. And it's literally not in the CRM, which means there's no possibility you're going to make an empathetic connection, because in CD, you're not going to remember. If you take 10 to 15 calls a day, you're not going to remember talking to Mr. Jones a week ago. It's just no way. So a vast majority of the time, it's not there.
That's right. That's right. And in some cases, there was even one where it was the day before they had talked to someone and then called back. And yes, I wouldn't expect that person to remember, but Mr. Jones remembers. They, the person was calling saying, "Hey, I wanted to follow up with you," and they're like, "Yeah, we talked yesterday." "Oh, we did? Oh gosh, yeah." So you just know, it's a little bit of an embarrassing situation there. In many cases, the quotes lacked, kind of any kind of marketing touch to it, let alone compliance. We also heard there was a quick cave, when they started talking interest rates or started talking about different specificities. I mean, it was kind of the quick cave of, "Oh, we can't beat that," and kind of backed away very quickly to objections. Repeat questions, you see that a lot, where information is filled out online and then someone calls you and is like, "Well, what are you doing? A purchase or refi?" It's like, "Well, I already filled that out." "How much money do you make?" "I already filled that information in," which is, again, a little bit of a jarring experience to that consumer that now wonders, "Well, where did my information go?" So the headline to that, and Joe, we'll get to your question, is it was a very transactional, very impersonal feel to the experience. And
Yeah.
Joe's question, Garth, is callers just wanted to get a rate quote and have it sent over to them. Was this just the rate quote, or were they really asking for an LE?
No, it was just a rate quote. We didn't say, "I want you to send me an LE." We tried to make it, and when we do Secret Shopper, by the way, and Brett's, amazing at this. He really thinks through and tries to create a profile that would resonate. And I will say, we don't act like jerks about this. Like, we don't act like that customer who says, "I just want a rate quote and stop asking me so many questions."
Yeah.
We'll answer any question that they ask. And we have a whole profile. We're a first-time home buyer. We're getting our money from here. We actually give where we work as a company that we know works with true work and the work number and those type of things. So we're trying to give an opportunity for an LA to say, "Oh, that's amazing," because that's one of the companies that we have an automated connection to, through payroll or whatever it might be. So, I mean,
Right.
we leave so many breadcrumbs to try to give somebody a chance to engage and make a real sales pitch. And a
Yeah.
majority of the time it is missed. The one
Yeah.
thing before,
Yeah.
because this is, and by the way, Sue, you do an amazing job of continuing to smile and being so delightful on really what is kind of coming across as a downer for the last 5 minutes. I'm the downer. You're supposed to be the upper. But the thing I will say is there were some exceptions. There was a lender in the room, and I'll give you a little bit of learning from them, who absolutely crushed it. And we do Secret Shopper for them. They crush it every time. They are
Yeah.
very, very good.
Yeah.
That's why they use us for Secret Shopper, though, because they are literally, if they find the littlest thing, they'll
Yep.
spin it, fix it, and off they go. And they do billions and billions of purchase volume. So it is
That's right.
absolutely 100% possible, but you have to be focused on what it truly is, the consumer experience. So let's be sure when we say the vast majority, that still means there were a few that were wow. There was a company that was present who had a absolutely amazing proprietary tech stack that literally popped the quote, and it took, you could do that online in 3 minutes. And it was
Yes.
extremely accurate. And then you could say, "Let me know if rates go, automatically do a rate alert. Tell me if rates go down an eighth. Tell me if the payment drops by 50. Compare 4 products side by side." I mean, people were like, "Wow, that's amazing. I don't have anything like that." So there were some uplifting, "Hey, look what
Yeah.
we can do." But and the other thing I just want to stress, these are 50 people in the room who are very active
Yep.
in this space. It's
Yeah.
not that they're like not really do CD. These are actually successful CD companies. And it's still, I say, Secret Shopping reveals an inconsistent process that you're delivering, especially on purchase, which kind of explains the 20%.
Yes. And
Right.
and let's face it, it isn't easy, especially when you are combining human and technology. And we're going to shift gears in a minute and talk a little bit
Yep.
about some of the technologies we learned about. But I mean, the overwhelming message is that I think everybody took from this is, as hard as we are trying, we still need to go back and look at that journey and look at that
Yep.
experience. And very often, you'll see lenders who are looking at their internal experience about it goes from here to here, and then it goes to the process, and then the underwriter does this, and then we have this thing do that, and then and you're looking at that internal experience, and we lose track of. In fact, I will tell you, I'm going through a mortgage process right now. I use my brother as my loan officer, and so I always have my favorite loan officer on tap. However, It is, as many times as I've been through this, it still is it's a wild experience to go through, and you kind of forget how jarring it is to, you're asked for the same thing. I mean, there's a lot of stuff and
Yeah,
I understand when it drags on longer than you expect. Yeah, you got to refresh statements, and I understand all that, but it still is like, oh man, what do you need now? What's going to happen? When is that appraisal coming back? And so it's putting yourself literally in that customer's shoes and seeing that. And I think we had a lot of people taking us up on secret shopping, like wanting to talk more about
yeah,
that following this event, because it's very hard to really put yourself in that customer seat.
yeah. So, by the way, and now I think I want to talk about the juxtaposition for another thing that we covered in the room. And we're not going to mention vendors today, by the way. No, no vendors. If you have a follow up, send us an email or note. And just because we don't want to create a public thing on YouTube that's about any particular vendor,
Right on.
I
Yep.
will say though, with the exception of three lenders in the room, the term Frankenstein tech stack was mentioned by someone early, and then everybody else seemed to adopt it. Oh, I have a Frankenstein too. I have a Frankenstein too.
Yeah.
And I don't think they meant this as a young Frankenstein funny, Mel Brooks version. They were talking about, I have this CRM, I have this point of sale, I have this LOS. They don't necessarily talk. I've got this CRM for CD, I got this one for retail, because they neither of them work great in the. I mean, you're just like, so there was a tone of how frustrating that can be, um, with a few exceptions that I think people were, and which introduces the next thing I want to talk about, the AI part. The other
Yes.
thing that we did, right in the room, is we had samples of agentic AI bots that talk to humans, and we played them. And if somebody's really interested, send us an email. We'll try to get you, a clip or something. And I had the chairman and just played one for someone, and literally got the oh, what, when they heard it. And
Yeah.
when we played it, they were 2.5 to 3 minute clips of mostly the examples we used, and we blacked out all the, beeped out the PII, but they were clips of an agent talking to the consumer about what they were looking to accomplish and trying to get a little bit more information.
Yep.
And the AI clips were so natural. So think about what we did here. Before lunch, we went through Secret Shopper, then we fed these people, and they probably were about to get sick. And then they came back and we shared, I think it was actually the next day, we shared this. Where the world is going to. And these agent bots were listening to objections, overcoming objections, um, empathizing with objections, and trading information, such as saying, yes, I can understand that is super important. Well, can I ask a follow up? And literally the way I am saying, a follow up
Yes.
of such and such. I mean, if you trained an LO, you would say, here's what an empathetic response model is. I did sales training for years. That's what they were doing. And
Yeah.
it, of course, executed it every single time at a fraction of the cost a human was. So the
Yes.
thing is, our models in many cases with these Frankenstein tech stacks maybe aren't delivering the sort of experience that a consumer might expect. That's what the secret shopper said. Meanwhile, AI is coming up fast and is able to do it. And there's certain people who would never want to talk to a bot, and I get it. So I mean, I'm it's not that.
Well, but hang on, because
Yeah,
now let's remember, first of all, the AI agents, in both of the cases that we looked at, they're handing this off to a loan officer. It is eventually going to go
true.
to a human, right?
Yep.
But when you say that people sometimes don't want to talk to bots, they're so good that you don't know. In
You don't
fact,
know.
we heard point blank that in the beta that was out there that we were running, hearing some of these clips from, three of the bots were asked out on dates because they were that good. They were that human. They were
Yep.
like, they ended the call with, hey, it's been so great. Hey, what do you think about grabbing a coffee sometime? I mean, seriously, 3 of the bots were asked out on dates. And so I think to Garth's point, if people have a philosophical objection to, I don't want to work with, a bot, they frankly
Right.
may not know. The other thing that was very interesting in this, when we think back to some of the things that went wrong in some of the secret shopping, the bots are there 24/7. The agents, I should say, the AI agents, they always follow up. Hearing the overcoming objections was probably one of the most remarkable parts to me. There was objections being shared about, I'm not really ready right now. I don't, have time. There was, and the agent was able to say, yeah, I totally understand. But, at the same time, this is only going to take a couple of minutes. If we just spend this time now, you won't have to spend it later. There was another one where the guy had somebody at the door and had to hang up on the agent, and the agent called back a little while later, and the guy apologized and said, I'm so sorry, somebody was at the door. I mean,
Yes,
it's
apologize
nuts.
to a machine
Yes. Yeah.
that
Yeah.
I hung up on you. Yeah.
Yeah. And there was another thing too. I remember there was one of the things where the person was, I forget what they said. It might have been that they just kept saying young lady this, young lady that to the AI agent. And
Right.
I thought there's some loan officers that would get offended by being called young
Yeah.
lady,
Yeah.
20 times. I personally, for the record, am not offended by that. But it was very interesting. An AI agent is not offended. An AI agent is never taking time off. They are there 24/7. There's no sick days. There's no, managerial problems. And I love Sergio's comment here in the chat. He said, 3, that's crazy. I have new and expanded empathy for LOs. Who
Yes.
knows what goes on out there? But yes, it
So,
was
all
fascinating
right.
stuff.
So, okay. So, young lady, let me give an additional example. Sorry. I had no idea. So from now on, I'll call with you start as hello, young lady.
All right, fair enough.
In fact, I'm gonna change your name in the phone, so when you call me, it'll pop up. Um, I that is the part on how much it was able to slightly ignore the objection, but restate it and say, hey, I totally understand it, and then trade more information. So a few of these calls that I've listened to, what actually is happening is exactly what you were trained the human to be. If somebody says no, it's really not yet. And it's probably because you haven't earned it by giving them information that has developed trust. And the
Yeah.
bot, it's exactly what the bot did. It gave them some more, asked a little, saved more. The one, I think one of the ones you're talking about, the bot asked, well, what's the purpose of the cash out? And the human being said, well, I don't really want to answer that. Oh, okay. And it just kept going. Re-asked it 2 minutes later after a little back and forth. And guess what? The person gave him the answer. And the reason is because at
Right.
least it was, so it just was sort of like, yeah. So I think
Yeah.
it, if CD has a $2,400 advantage and these bots can really crank this thing up and be efficient, imagine what that advantage might be. And I started as a retail person, and I started a company called mortgage.com, which was a CD company. So I've been straddled both areas. So if I'm a retail guy, I'd say, okay, how do I get bots that help me warm up leads? And here's another one. We have somebody in the room they have 2 channels. They have retail and CD. They heard it and went, I'm going to use that bot to call all my former customers.
Yep.
And I'll call them every 6 months and just say, how you doing? And that was one of the examples that we had, which was, you got our loan from us in 2022. We got a loan from you. You got a loan through, insert loan officer name here in 2022. We just wanted to call and see how you're doing. And if you had any questions about your mortgage. That is like, you try to get a loan officer to do that. It's just not a very efficient thing because the bot doesn't care about the dial tones and leave the messages and everything else. It
Right.
just keeps cranking through the list until it gets somebody. So
Right.
it was a wow for a lot of people because they said, this is something that, I now suddenly see how bots or how AI can do more than just read the data off a pay stub or
Yeah.
identify that it's a pay stub and not a bank statement or whatever, kind of the previous generation of some of these AI tools has done.
I think, you know, the biggest headline too was, and just everybody hear us, you know, I mean, at Stratmore Group, we're not in favor of like, get rid of all the humans. I mean, but that's never been our, you know, never been any of our philosophy. However, I do think about how can this supplement, how can it enhance? Because there are certain things where man, a human is needed. I mean, as many
Mm.
transactions as you have all been through, as many as I've been through, you know, there's a time when you got to reach your hand out. You need a person there, especially on a purchase transaction. But to Garth's point that he just made, there's so many like there's so many things that you can do that are even outside of it, you know, the database follow-up, the, you know, the trigger lead follow-up, or the, you know, watching what is happening in your database. We talked about making phone calls about insurance. You know, that's a huge pain point for people right now. In
Yeah.
fact, what was your t-shirt, Garth? The WTF?
Oh, WTF, welcome to Florida. So we have, of
Welcome
course,
to Florida.
at least one every 10 slides is a joke slide. So that's yet another reason you should come to Consumer Direct workshops
Indeed.
and I get the jokes
Indeed.
for free.
Indeed.
I live in Florida, so I occasionally have a WTF, welcome to Florida.
Yes, yes,
So
yes. And as do I, as do
yeah,
I. But we're not kidding about the insurance. But again, just another example of you start to think about the applications of these AI agents in servicing. And, you know, because retention was another big topic that we did touch on there
yeah,
in terms
100%.
of just but then you think about kind of going back and how do you apply AI, you know, back to the retention efforts that you're making. And this is what's coming and it's for real. And yes, Michael, WTF is welcome to Florida. So,
Welcome to Florida.
and our insurance rates.
All right, so take a look at the chat, young lady, and then tell me if there's ones you want me to address. The thing,
You
though, I
know,
will try to. Oh, go ahead.
yep, I was just gonna say, a couple of you have put notes in there and I can already see my email lighting up. So yes, feel free. I put my email address at sue.woodard with one W in it at stratmorgroup.com. I've got it further up in the chat. Feel free to send me an email if you'd like one of the recordings. Be glad to send it to you. I think
And
we've
you also, Sue Woodard, you can find on LinkedIn because she literally posts constantly, and me, you can find on LinkedIn because I have a weird name. So either way, you can find us on LinkedIn.
all true, all true. I do
Yeah.
want to go back. There's a question here from Michael, which I think is an interesting one. He said if a lender has a consumer direct channel and a retail channel, boots on the
Yep.
ground or office, and the secret shopper called consumer direct and the retail center on the same day, and there were quoted different interest rates, higher in consumer direct and lower in retail, how is the rate disparity explained?
Okay, so a reason to use Secret Shopper is the people, process, and technology from a consumer perspective. The other reason to do it are compliance questions exactly like that. So how are you handling the fact that you might have two different rate quotes going to the exact same, scenario? That's a little tricky. So I'm not sure exactly how to explain that. But it is very consistent. And the other reason it's also consistent and happens a lot in our industry, as we know, is rates change all the time. Now, from a
Right.
consumer perspective, they don't know that. I mean, they don't know that I called yesterday and got 6 3/4. I called today and got 6 7/8. Um, you know, what the heck
Yeah.
happened, right? Now,
Yeah.
you don't necessarily, it's not that big a deal either, but it changes all the time, or the scenario changed, or, last time you said I had excellent credit, and this time you said, yeah, it's pretty good, and so they changed the stated credit assumption in their model. Who knows? But
Yeah.
it's hard for me
Okay.
to answer that question, but that is
Yeah.
yet another
Yeah.
reason that, Secret Shopper can be revealing from a compliance perspective.
For sure. Joe made the comment. I thought this is an interesting one to call it out. Joe Darlene said he was working with the consumer direct group that the strategy was to keep the borrower on the phone long enough for the rate quote and actually send the initial disclosures to the borrowers before they hung up.
100%. Yeah. I mean, by the way, the two the big CD lenders who are doing this at scale are doing LEs on the first call, if at all possible. They're trying to drive straight through and do the LE and get it to them. So maybe not the whole disclosure package, Joe, because, by the way, the rule is you got to give them an LE. The rule is not that you have to give them a disclosure package before ITP. You can have the compliance person can debate with me that later, but it's just the LE, is a very good model to give them an LE super fast on a single session if the scenario warrants it.
Right on. And Jeff Walton, CEO at Ingenious, and their data solutions asked the questions: do the AI agents need to be NMLS licensed?
Yeah.
It's a hot, but I'm like, it's not a bad question.
The license activity is still generally going to the human, or it's going to the human being that has it. I don't think anyone yet has said, I am trying to license a entity rather than a person. So you're still, when you get to that point, you are going to do the license activity. But just for the sake of argument, imagine 10 bot conversations are queuing up a human. And now suddenly, an Ingenious data shows the average LO is doing 3 loans a month or whatever it might be. I mean, why couldn't they do 10? Because they don't have to waste as much time on the upfront conversation. They're just sort of saying, hey, I'm going to transfer. And by the way, the bot examples that we played in the room, every single one of them ended a call to action for a human. The successful ones. I mean, the unsuccessful ones just ended, but the successful ones ended with I can call you, is 2 o'clock or 3 o'clock better for you? Alternate choice close.
Yep. It was impressive. So I threw out into the chat if there's any final questions before we do wrap up. Garth, you're on the road. You're going to be on the road again. We're headed off next week to the gathering out in Colorado Springs.
Yep.
And then maybe there's a summer breather on conferences for a little while. You've been on the road like nonstop this year.
Yeah, there will not be I will 100% be on the road, but I think you're right. It is a break for conferences until the first week of August.
Very good. I know.
And then this fall it'll be back. So
any summer vacation, Garth?
I go from Fort Lauderdale, Florida to Dewey Beach, Delaware on vacation every year because my wife's family's been doing it for 56 years. It's part of the marriage vows. Love, honor, obey, and Dewey Beach. So I start at the Atlantic Ocean where I live in Florida and end up at the Atlantic Ocean in Delaware.
Okay. Well, and there you go. All right. Good stuff. Good stuff.
Yeah.
Well, hey, thanks everybody for joining. Dewey. Oh, wait, we have Thrasher's Fries. Is that a thing?
Man. I'm not a French fry guy, but I've been known to go to the Starboard, Deidre. So there you go.
All right. I'm actually going to a Formula One race this summer. I'm very excited. I've gotten very into Formula One. So we're going to Silverstone end of June, beginning of July.
Get some earplugs, young lady.
Yeah, all right, I will. What? What? All right. Hey, thanks everybody for joining us for another episode of the Advisory Angle with STRATMOR Group, powered by the Chrisman Commentary. And thanks always to our friends at the Chrisman Commentary. And we will see all of y'all next month. Thanks, everybody.
See you later.